Today, we're cracking open the books on a crypto giant, Kraken. It's gearing up for a huge, highly anticipated IPO. And in this explainer, we are going to break down the entire investment case piece by piece, straight from the research. So what does it take for a crypto giant to go public? It's the big question, right? It's never just about timing or cool tech. It's this complex mix of scale, strategy, and what the market is feeling. And Kraken's story, well, it gives us a really compelling answer. First thing you need to understand is this scale. Kraken isn't some flash in the pan. It's a global force. Get this, we're talking about a customer base of over 10 million users spread across 190 countries. That is a massive, established network. And they've got some serious staying power. I mean, they've been operating since 2011. That's practically ancient in crypto years. They've navigated the craziest market storms, proving they're resilient and building a brand people actually trust in a super volatile industry. And all that experience, it translates into some serious value. A recent investment round valued the company at a staggering $20 billion. That puts it firmly in the heavyweight class of fintech giants. Okay, so here's how we're going to break it all down. We'll kick things off with the pre-IPO opportunity itself. Then we'll dig into why there's such a sense of urgency. After that, we'll go inside the Kraken ecosystem, check out the market's tailwinds, and wrap it all up with the big final question on valuation. So let's get right to it. What's the core financial play here? It's really about a specific window, an opportunity for investors to get in before this thing hits the public markets. Okay, so check this out. The opportunity on the table right now, this pre-IPO round, is being offered at a valuation of about $15.2 billion. But here's the kicker. A very recent round with strategic investors valued the company at $20 billion. You see that gap? That's the heart of the whole argument, the pre-IPO discount. And what does that discount potentially boil down to? While the investment thesis is aiming for a 2x return by the time the IPO actually happens, which is projected for the first quarter of 2026. It's a really clear, really ambitious target. But this all begs a really important question. Why now? What is the big rush? What's driving this push to go public right now? Well, it really seems to be a perfect storm of three key things all coming together. First, the regulatory environment is finally starting to soften up a bit. Second, public market investors are showing a huge appetite for crypto companies. And third, the IPO process itself is already well underway. And that's not just speculation. The research confirms it. The confidential S-1 filing, that's the official first step to an IPO, has been submitted. The wheels are officially in motion. The train has left the station. And you can see a clear trend here. Just look at how recent crypto IPOs have performed. Circle jumped 170% on its first day. Bullish was up 82%. This is sending a massive signal that there is a huge appetite from public market investors for exactly this type of company. So, we get the timing. But what about the business itself? What makes Kraken a compelling long-term player? Well, it's about being so much more than just a place to trade Bitcoin. Kraken's core strategy for growth is actually pretty brilliant. They acquire and integrate, they don't build from scratch. Instead of spending years and tons of cash developing new tech, they buy innovative companies and just plug their solutions right in. It is all about speed and grabbing market share, fast. For example, they acquired a company called NinjaTrader to instantly add futures trading to their platform. They bought another one called Breakout for its proprietary trading tools. Each move is a calculated step toward their ultimate goal, to become the world's #1 crypto platform with a special focus on growing their institutional business to a third of their total revenue. But beyond just buying other companies, Kraken is making some huge bets on the future. They're developing something called Ink, which is what's known as a Layer 2 blockchain. It's designed to make decentralized finance, or DeFi, way faster and cheaper. And they're also launching a new stablecoin, USDG, with massive partners like Robinhood. These aren't just minor features, these are foundational plays for the next evolution of the web. Okay, now let's zoom out. A great company is one thing, but a great company in a booming market, that's a whole different story. And the crypto exchange market is projected for some absolutely explosive growth. I mean, the numbers really speak for themselves here. The global crypto exchange market is forecast to grow from roughly $37 billion to over $264 billion by 2030. That's a sevenfold increase. A rising tide that massive can lift all the major players, especially a leader like Kraken. So, what's fueling all this? It's that softer regulatory touch we mentioned, a huge surge of big money coming from institutional investors, and a fundamental shift in perception. Crypto is no longer seen as just this exotic gamble, but as a legitimate tool you can use for portfolio diversification. And this brings us to the final piece of the puzzle, the bottom line. With all this in mind, what is the core valuation argument for Kraken as it heads toward its IPO? The core argument really comes down to this: valuation. When you compare how Kraken is priced relative to its revenue, that's a key metric called a valuation multiple, against its competitors that are already public, the data suggests Kraken is significantly undervalued. The market is just paying a much, much higher price for its peers. And this right here is the crux of that 2x return target. The thesis is that once Kraken becomes a public company, its valuation multiple will expand to be in line with those competitors, somewhere in the range of 16 to 20 times its revenue. This re-rating is the primary driver of the whole expected return,